the institutional property advisors, they talk about an upside surprise, and
that's good.
Yeah, so it's like the expectation based on RealPage and institutional property advisors data is 442,000. Sorry, I don't have the chart up here, but I can just give it to you verbally. 442,000 of absorption total for Q3 2023 through 2024. Using CoStar data. I actually wanted to get what CoStar would say, and they have it as 574 absorption by year end for 2024, but that compares to 670 deliveries estimated by the end of 2024. Newly built supply, still the biggest factor in the market. The total for 2020 to 2024 is 2.15 million for absorption, 2.6 million for new supply. So I'm rounding a little here, but it's clear that supply has outstripped demand for the first half of the 2020s.
Yeah.
And that's including the times when there was this huge demand, and that's also including the times when demand dipped down because of the new supply. And also, I would argue, because of the growth in rents, maybe it was a little stronger, but that's an argument for Jay. That being said, this is a report on apartment demand, and that surprise to the upside could mean that apartment supply and demand are coming into balance more quickly than expected. I may be wrong. Maybe demand is easier to move than supply, but I'd like to think that there is going to be some tailwind, some momentum to the demand in a way that we won't maybe see with supply. So that's the IPA. The institutional property advisors. I do think that the word upside surprise always has like it's an upside to you. It's like the landlord's upside is a renter's downside. So I just want to include that caveat at the end.
That's true.
Yeah. Okay, so moving into apartment list, this is, I think, a very instructive contrast with the above reports focus on strong demand. They actually, when it comes to demand, it's vacancy, it's a little bit related, but they say that that the vacancy numbers have ticked up from 6.7, it was at 6.7 for 6 months, and then to 6.8. Not a huge movement, but something worth watching. The real thing that I really wanted to come at is their month-over-month rent growth numbers. Now you can see the vacancy here. It looks like
it's unchanged.
It's almost like flat.
It's a wash from 2020.
Yeah, and in that,
which again, and I just wrote this on another quarterly report. In the face of 50-year record supply, vacancy essentially unchanged from July of 2020 is incredible.
And I do want to note that even this,
when supply slows down. I don't think vacancy increases. I mean, we have some more absorption to go through.
That's exactly right. So we're coming down from this this wave of new apartment supply, and there are other numbers like from RealPage that have recorded it's like more positive numbers for occupancy. So then I will be the first to keep following the numbers if there's an uptick on vacancy, especially from apartment list, because I like to know, if they're disagreeing or agreeing. But there's reasons to be optimistic that that the vacancy numbers are coming down. On the other hand, if you're looking for optimism on the rent growth side for the apartment market, you may be a little bit more disappointed because it is negative 0.7 rent growth year over year for the apartment market, and negative 0.7 rent growth month over month for the apartment market. I'm looking at this is the key chart here. If you look at the month over month rent growth, and you compare 2023 to 2024, then almost exactly the same. You're really getting a mirror image. It is almost really, it may be almost exact. It may be, very similar. That's all I'm trying to say. It's striking. But I think that we are in a completely different place right now. I think the numbers may shake out to be a little more positive this year than last year, but it's a sobering reminder of the state where we are. And I
don't know. I mean, I could see pretty rough numbers this winter, Matt. Things slowed down a little bit sooner seasonally than they typically do, and again, we're facing a lot of this supply, and it wouldn't shock me if we see one final maybe slide downward in rents, just as we usually do seasonally, but it may just be a little bit more pronounced, or maybe it's normal. Just we never had the growth in the spring and summer months to really kind of make up for it. Yeah. We're like 2019, you look at this chart where you have, multiple months that are kind of getting close to 1% growth just in a single month. And then you have the latter half of the year, which is, relatively negative. People are already in school. Just the leasing season is generally done. We just didn't have that surge, or maybe half of the surge in this typical leasing season, but the declines are even further because landlords are looking to optimize for occupancy, getting heads in beds and saying, oh man, I'm already at only at 85% occupancy. I'd rather get the extra 5% lease to 90% to have some income coming in rather than none. And I think there's also a recency bias in the industry in terms of rent growth, is that we've now had 2 years of very kind of sluggish or no real rent growth, of basically property, managers have successfully argued that, like, hey, look, we really shouldn't raise rents. Like, renewals.
The algorithms were supposed to fix that.
Yeah. I thought the
algorithms did not make rent grow a lot these past 2 years.
They're broken. Well, same thing. It's boogeymen, immigrants.
That's a good Halloween. That's good.
Yeah. So that would be good. Yeah, you could be a real page algorithm for Halloween.
Man, that's a good one. Costume. Yeah.
Yeah. But what are the boogeymen that are being thrown out there that are just it's marginal issues, immigration or real page.
Yeah.
Do they both have an effect? Sure, but I think you bring up this great argument. Well, then why have we had negative rent growth? Why have we seen some price declines if that's the thing that's moving the needle? And just because
they knew they were they knew they were going to get investigated, so they're like, let's dial it down. And
maybe that's how that works.
I think,
we're in a recent bias of we're not going to have any rent growth, and I'm like, look, this supply is going to be slowing down. Whether I think it's second half 25, early 2026. And again, go back to a chart that has the last couple of decades. You see declines like this in a year in terms of rents. You see growth after those. But I think there's more pent-up demand, and I think we're going to see that supply surge cut off just because rates have been high. It's hard to develop. You can't find the equity or the debt to develop.
I did check after our discussion last week. I checked on the multifamily construction numbers, like how many units are under construction at a given time. The peak was like around 1 million. The maybe like elevated high point was like 600,000, and we're at our like 820,000 are under construction now. We are coming down from
we're still delivering a lot.
Yeah.
But we're sliding down.
Yeah.
So this is a time for patience. Again, I think like we're talking about things happening in the course of like 2 years, not months. We're talking a year, 18 months. And it could be in 9 months, but it's most likely going to be a year to 18 months before we really start seeing that turnaround. And if it happens, maybe the pandemic or the algorithm changes this. But in the pandemic, we saw it in 2020 and really kind of the first half of 2021 when there was all this demand, but there was recency bias to the pandemic, and the bias was no one's going to have a job, no one can pay rent. Let's lower rents, let's give credits and concessions, and the market's going to crash.
Yeah.
But then it took, some landlords a year to realize, oh, everything's 100% occupied, and the neighboring property has increased rents by like 10%, and I'm all of a sudden under market significantly. Oh, but I just renewed my entire community, or I just renewed all of these leases. And so when you miss out on a year's worth of growth and being below market, good for the renter, but I'm just saying if you're trying to optimize and stay on top of the market of just being at market, which that's what the algorithm's supposed to do. You don't need necessarily an algorithm to do it. You just listen to the Gray Report or just pay attention a little bit. So there will be that delay when there will be demand, and it's important to stay on top of it.